Welcome, landlords and property investors. Today, we're looking at what the rest of 2024 has in store for you and your investments. With the new government in power and fresh policies coming into effect, there's a lot to consider before making your next move. As most of you likely know, 2024 has brought a new government to the UK, and their agenda could significantly impact your investments. Although the Chancellor, Rachel Reeves, hasn't made any firm decisions regarding changes to capital gains tax, there is speculation that adjustments might be introduced in the autumn budget on the 30th of October, due to a £22 billion budget deficit. Despite saying they have no plans to increase capital gains tax, Labour has not ruled it out completely. So, what exactly could happen with capital gains tax if the Chancellor does decide to make changes? It's possible she could increase the capital gains tax rate for higher rate taxpayers, potentially aligning it to more closely with income tax rates. So, this could mean a jump from the current 28% on residential properties to a rate as high as 40%. Let's break that down. If you sold a property with £100,000 gain today, you'll pay £28,000 in capital gains tax. If the Chancellor does align capital gains tax more in line closely with income tax rates, that could be a rise of £40,000. That's a big difference, right? So, if you're considering selling any residential investment property, now might be the best time to act before any possible changes could come into play. But what about buying? Well, that's a mixed bag. Property prices in some areas have started to stabilise and, in some cases, even decrease slightly. This could mean better buying opportunities, but with the possibility of higher tax rates on the horizon, your long-term strategy needs to be spot on. So, what can you do to mitigate the impact of any potential capital gains tax changes? Here are 3 strategies to consider. First, consider incorporating your portfolio into a limited company. Corporation tax is currently lower than capital gains tax, and you'll benefit from tax-deductible expenses. Second, maximise your allowances. Couples can transfer assets to take advantage of both partners' capital gains tax allowances, potentially saving thousands. And finally, look into reinvestment options like the Enterprise Investment Scheme, the EIS, to defer or even eliminate some capital gains tax liabilities. Despite any possible tax changes, the rest of 2024 still offers great opportunities in the rental market. With mortgage rates stabilising and rental demand still high, especially in urban centres, buy-to-let properties can offer solid returns. Focus on high-demand areas and properties that appeal to long-term renters, student accommodation, HMO conversions and affordable family homes are all worth considering. However, don't forget about the compliance. New regulations around energy efficiency and tenant rights are stricter than they've ever been before. Make sure your property meets the new EPC standards and stay up to date with the local licensing requirements. There you have it. For the rest of 2024, successful property investment is all about timing, strategy, and staying ahead of the regulatory curve. While the potential changes to capital gains tax may seem daunting, they don't have to derail your plans. If you're currently considering selling any residential investment property, the sooner you do so may help you avoid any potential increase in capital gains tax. Let Property can put your property in front of over 15,000 active buyers and could complete a sale within as little as 7 days. You won't have to pay any fees, there's no obligation to sell, and you decide if the offer's what you want to accept. For more information and expert guidance, visit letproperty.co.uk or click the link below today.